Okay, everybody, without further ado, Valeria Bednarik, Chief Strategist at FX Street. Here we go.
Hi Dale, how are you?
I'm fine, Val. How are you doing today, my friend?
All fine, all fine for sure.
Okay, so last week after the Fed, we had some retraces, and most of the pairs have taken out the Fed spike. I was
Yeah,
really looking forward to talking to you to see if perhaps some of your biases have changed with what's happened in the dollar, or is this just another great dollar buying opportunity for new lows in the euro, um, new lows in Aussie, etc., etc.
yeah, pretty wild movements. I was thinking how many times we have said these days, if we remember when we were complaining about the low volatility we
Yeah.
had last summer. Anyway, honestly, I was following really closely the 110 level in the euro dollar because if you take a look at bigger time frames,
Yeah.
it's the 50% retracement of the slide in between February and March. I
Okay.
take it daily basis because the pair has settled in this area, sort of
Yeah.
beginning a consolidative movement, and then it resumed its
Right.
decline.
Uh-huh.
And so far, it has been unable to really break above it, except for today, right? But it was a really short-lived strength, and now the pair is aiming to break back below 900. So I don't know. But then I have been watching that not only this week, but next week also. We will have a lot of Fed members talking. And I do believe this Lockhart, the one saying that the rate hike won't be taking longer than September, saying June, July, September. And he's a good thermometer of what's going on in between the Fed because he tends to think in the same way Jalen does, Fisher does, the core of the Fed, right? So it's like a huge statement, right? The market will have its rate hike this year.
Okay.
Guess that adding to the positive figures we just have right now in the US, employment and manufacturing, it's helping the dollar bounce. Nevertheless, what I'm seeing in the market is that the pair has found, at least the euro dollar, has found a comfortable price zone in between 900 and 910. So we need some follow through to any level before taking a clearer move. Anyway, I don't know. I'm inclining to myself to think that this is another selling opportunity. Selling opportunity in here, buying the grain back at better levels. Short term, I'm not sure if the euro will continue falling. It's just tested by the paper, the 100 simple moving average. So maybe if we extend below this previous lows, 890 or so, then the rally may extend to downside in the short term.
I'm kind of thinking, Val, the big question is, it was a nice rally, about 550 pips, and I
Yeah,
was expecting some give back, and it sure took a lot of time for the euro to take out the Fed spike high.
yeah,
Pound didn't even get close to that Fed
no,
spike high, and Aussie took it out well before the
yeah,
euro. So the question I'm asking myself, even though I'm thought that we could correct this recent bounce, is do we put in a higher low in the euro and then eventually take out the resistance area that you've just noted and head up
yeah.
towards 113, 115? I think that's the big question. I just think that after a move like this, there's so much euro bearishness entrenched in the psychology of the market that it may take more than what we've already had to shake out some more euro bears. I mean, they're going to be calling it a bear market rally even if we went up to 120, halfway back or something like that,
Yeah,
right?
well, for me, the line in the sand is that price zone around 1120 because it's a big fibo and we have former lows in the area. So at this point, I would like to see a pair breaking through that level to call for a bullish continuation,
Oh,
right?
right.
And then I see a 15 as possible if we take this 1120 price zone. But in pound, I don't know why, but Well, I know why 150 is a hell of a static psychological level,
See how
right?
much? See how much it missed the Fed spike high. It didn't get within
Uh,
100 pips of it.
over 100 pips, yeah,
Yeah,
150 or so, because it's been unable to take the 150 level pound.
yeah.
See, after the Fed, right? But the general bias, according to indicators, is still bearish, and even took that 2830 price on just now. So this is some short. I would expect some short-term consolidation in here, but if it does not recover quickly above these levels, I do believe the pair is exposed to further downward in between today and tomorrow, down to 4720 price zone.
Okay. So definitely weaker than the euro, and the if you had a strength meter, and I believe FX Street does have a strength meter, I think you have to give the edge to the Aussie for the best performance on this dollar correction. So my view is I think the pound has the best chance to make new lows, followed by euro, but I don't think Aussie will on a dollar bounce.
I do agree with you in that. The dollar Japanese yen is getting interesting for me because it has challenged its 100 simple moving average in the daily chart. So far it's recovering, but if we close the day below it, it will be the first time in like months it break below it. So the risk will turn towards the downside in here. It's about how the market develops today and tomorrow, right? If we close
and
below.
what's that line in the sand that it has to close under?
19 level.
119 even. Okay.
Yeah, sort of.
Okay. And pullback levels in the pound again was 147.
147.20 price zone.
Okay,
That's
I'm
the
just
low.
writing down some figures for the copy of the interview. Okay.
Okay.
What do you think about what happened to? I think the big story yesterday was the big slide in stock indexes.
Yeah, it has been. Stock indices have been falling. Sorry, for I believe today is the 4th day in a row.
Yeah. So yeah. So what we talked about is playing out. That the dollar weakness, although it helped the market big time the day the Fed talked dovish and talked the dollar down, that eventually a weak dollar was not positive for U.S. dollar denominated assets, was it?
Yeah, indeed. I was watching the Dow Jones approach to that formation you call in long term. I'm still following it. I have the monthly chart because it's easier to see.
Yeah, you still got that line in there.
Yeah, I still have them and I'm following them. I'm watching them. I'm keeping an eye there.
Yeah, that's my Nostra Pinkert line.
I'm seeing the Dow Jones make continuous sliding 17,400. It's the key because it's the 200 simple moving average on a daily basis. It has broken today below the 101 and below former lows, right?
Yeah.
In early March, so I guess the bearish movement can extend down to that level. Again, this is for me a line in the sun because if we lost this one, yeah, the movement will be a big one to the downside. Next target will be this lows around 17.
Okay, and anything you'd like to wrap up today? We're going to be working tomorrow together for the GDP. You have what's the market's expectations for the GDP?
I'm really not. I did not check, but if you give me a second, I will, and I will do the wrap up.
You know that if it's weak, they're going to spin it with weather, right?
Yeah, everything is about the weather lately. Yeah. If it's weak, it's because of the winter. If it's good, it's because we are growing, right?
Yes. So, isn't that something? How that washing machine keeps spinning and spinning and spinning.
Yeah. All news. Yeah. Nothing that will surprise anyone. Anyway, I would like to invite everyone to join us tomorrow, or next Friday to the live coverage of the GDP readings in the United States. The expectations are for 2.5% growth in the last quarter of 2014, right? I believe it's the last revision. Previous one was 5.0, so 2.4 will be, despite a good number, quite disappointing. We will need something about 3.0% to see lower, maintaining the positive tone into the weekend, right?
Yes.
But anyway, I hope everyone can join us so we can see the market. Yes. And trade and have fun.
Yeah, react to the reaction with Val and Dale tomorrow. And Val, yes. Aren't you happy that Yellen gave us a two-sided market again?
Yes. I can express how happy I am because I was really missing this kind of volatility in the market.
Yeah.
The fact that I placed an order and it will take 1 century to get into the market and 1 century to get out.
Yeah.
And so now I can't. You end place in the market and you're already out.
Right. Yeah.
Good.
Nice.
That is good.
Yeah. If your areas are good, a lot more immediate gratification or wrong right away seems to be how it's working now.
The important thing for me is not if I was right or I was wrong, but to get out of the market before I get old,
Yes.
Not having to wait for a short-term position for hours. I was not happy. No, not a happy teapot with that kind of environment.
Val, thank you so much for your time today. And I knew it would be an interesting interview since the worm has turned a little bit in the market, and look forward to teaming up with you tomorrow morning at 8:15 Eastern Time.
Yeah, same here. Really will be a pleasure. Hoping this volatility is here to stay. And hoping also to see you all guys there.
And we'll end that with one big amen. Thank you, Val.
Thank you, Dave. Bye-bye. See you tomorrow.
Okay, my friend.